It is Wednesday, September 4th, and we have another red day on the books, at least from the start by the looks of things. Although it does seem to get mildly better. So the Dow, the S&P 500, and the NASDAQ are all in the red. The NASDAQ had a hard day. The Dow and S&P also had hard days yesterday, being in the green and down enough. I mean, I'm not going to say significantly, but it was definitely on the lower side. But this is normal for September, and it's a good time to think about where you want to be positioning yourself going into September and into October when we start to get more earnings coming out in October for Q3. So even though we're not done the Q2 earnings yet, which we've seen some today, talk about in a second, we are getting ready for Q3. And the first ones to report in Q3 in mid-October will be the financials. And we should hear in September about a rate cut, and that should send financials on an upward trajectory. So they're pulling back right now, which is great because they're going on sale. So let's get in on the back to school sale of financials and then sell it on the actual news when they skyrocket and go up, and take your percentage gains and take your profits. That's what we're about on this channel, is small percentage wins, selling them when you get them, and then waiting for an opportunity to buy back in so that you can do the same again. It's a rinse and repeat strategy. Stocks do not go up consistently, and they do not go down consistently. They go up and down. So sell them when they go up, buy them when they go down. It's a very simple strategy, but it's one that you need to stick to. That will ensure you take your profits. Hey, if you're liking these videos, please subscribe to the channel. My subscribers are growing. I'm excited about it. It makes me more interested in doing these videos and sharing my knowledge with you. So please take a second and hit the subscribe button. If we flip over to the Yahoo Finance app, so this is my favorite app to look at throughout the day and see where different stocks are moving and what's going on. And what we can see here is the VIX has popped up, the volatility index has popped up above 23. Looks like it's potentially going to move forward again this morning. That indicates that obviously there's increased volatility, increased risk concern in the market, but that's okay because we're going through a bit of a shift. We're going through a shift from this popular backing of NVIDIA and the Mag 7 stocks into another sector. And people are trying to figure out what that narrative is and what the sector is. And although tech looks like it's in for another red day, could be a great buying opportunity, we are seeing that oil is starting to make a turn. Well, it was. Now it's gone red again. Anyway, it's down around $70.30 a barrel for crude futures, which are a month out at this point, so it'd be into October. But this is the lowest we've seen. There's still a tremendous amount of tension going on in the Middle East, and the US is looking to impose sanctions on Venezuela, a major producer of oil. All of this bodes very well for US domestic crude and should send the price higher, which should help with US refineries and their ability to increase revenue and profitability in the coming quarter. If we take a look at retail, one of the stocks that got hit hard last week, if we look at the 5-day, was Dollar General. Dollar General got clobbered, down 32%, and it's remained down at that 83, 84 level. If we go back and take a look at a stock that just came out today in the same genre of, we'll call it low-income retail, we have Dollar Tree. And Dollar Tree was off 11% this morning, okay, more than 11%. It's now down at $72.35. Both of these stocks are getting hammered based on their future forecast being poor and a revenue and earnings per share miss. Now, that said, if we look at Walmart, Walmart has been a winner. They have been victorious throughout this. My dog loves Walmart, gets all of his dog treats from Walmart, and so he's a big Walmart shopper. He's very excited. And Walmart did very well on earnings. If we look at the last month, it was down in the 67 range, and it popped up to about 73. It's now at 77. This is a stock that is growing its e-commerce presence. It is a large big box retailer that has extremely strong buying power and is known for negotiating hard with its suppliers. And it doesn't have the return policy that Costco has, which has an impact on its suppliers as opposed to Walmart. And it pays a great dividend. So that's what we're seeing today is a bit of a downturn in these low income dollar store kind of stocks. What we're also seeing today is news from Sam Altman. So Sam Altman, the founder of OpenAI, has agreed to put in billions of dollars into US-based AI infrastructure. That's a good sign because all of these companies that we look at in the Yahoo Finance app at some point in their corporate lives will incorporate AI into their business model if they haven't already. And we've heard from Walmart that Walmart has started to. We've heard from Meta that Meta has started to. And we're starting to hear that more. I expect in the Q3 earnings report, we'll start to hear that a lot more from other companies. If we move down into oil, we've got little movement, but it's a mix of red and green on the screen. Crude was up, now it's down 15 cents. I expect that we're hitting a bottom on the crude side, and crude will start to turn and will move upwards into the fall and winter timeframe. So we've had some major pullbacks in some stocks, which make them extremely attractive at their current prices. Valero down in the low 140s, extremely attractive. Chevron in the 140s, mid 140s, again, extremely attractive. If you look at some of these stocks and look at if they pay a dividend, Valero pays a 3% dividend. So not only will you make a capital appreciation, but if you hold the stock through to the ex-dividend date, the date when you have to hold it and be listed as a shareholder of record in order to receive the dividend, usually 15 to 30 to 45 days later, even if you don't hold it 30 or 45 days later when it's paid out, if you held it on the ex-dividend date, you will receive the payout on that future dividend pay date. So this is a great stock with a dividend. Chevron, if we look at Chevron down in the mid 144s, it pays 4.5% as a dividend. So this is income that you can count on if you own these stocks on the ex-dividend date. We get into Helmerich and Payne, another one paying 5.29% as a dividend. That's more than you're going to get in a treasury, one-year treasury bill, or any kind of guaranteed investment certificate, or most money market funds that that you're looking at these days. So these are phenomenal payouts, and if you can get the stock at a significantly reduced or fair market value price with potential for upside and capital gain, you'll get both a dividend payout and the capital gain. So I would take a look at that. We're seeing tech get beat up as we scroll down. Micron has yet to report. So Micron is a late reporter in the earnings cycle. They don't report until September 25th, and I do expect that they are going to have some great results. Now, that said, we're seeing CrowdStrike get beat up. CrowdStrike had great results. I wonder if that outage is going to affect this quarter's results. I thought it was going to affect last quarter's. Maybe it's been delayed a quarter and they were able to get the deals closed that were in the pipeline. I'm still very cautious around CrowdStrike as it pulls back. Palantir had great numbers and is pulled back, but not significantly. I would stay away from Reddit. I'm not a big supporter of Reddit in terms of a business model. I think they're far too small for the advertising revenue they need to generate to have a sustainable model. CRM had great numbers, and yet they were down. This is a stock that I expected to be, or do expect by October, November, to be a $290 to $300 stock. And they're off today, so that presents an interesting buying opportunity there. Palo Alto, it's a little rich right now at 355 in my opinion. I'd wait for a pullback on that. I love Cloudflare under $80. I think that's a steal. It was down $4, more than 4% yesterday. If we look at others, Airbnb, I think Airbnb is going to continue to struggle. We're seeing a pullback in travel spending. So that's going to affect hotel stocks. It's going to affect Airbnb. It's affected the airlines in the last quarter, likely going to continue to do that. Microsoft under 410, looking like it could get into the 390s, is a phenomenal buy. This is a company that has a ton of cash flow. It generates a ton of cash flow, and it's profitable and it's growing revenue. Now, it may not be growing revenue on a hockey stick curve and going up like NVIDIA, 2, 4, 600%, but it's growing it steadily in the double digits, and it pays almost 0.75% in a dividend. So very stable and willing to pay out some of that cash flow. I'd be staying away from ARM right now because we're seeing a sell-off in the semis. So that's one that dropped $7, more than 7% yesterday. That's a big fall for ON, but it will recover. So if you own that, stick to your guns. It's going to come back. It's probably going to take until the end of the year, maybe into January, February, for these to bounce back as things start to turn around. Things usually go up as we head into a US election in November, and they usually increase before the US Thanksgiving, the third week in November. So hold on to those and you should see them turn around. AMD down yesterday, looks like it's making a bit of a recovery today. That's a steal at under $137 right now. You've got Workday, which was off yesterday, off again today, almost $10. This was a stock that had phenomenal earnings this quarter and jumped significantly. We did very well on Workday. If this continues to fall, I'd begin looking at that again. We've got Broadcom. Broadcom announces results tomorrow. So this is a stock that was down yesterday, looking like it's down a bit today. I think the earnings from Broadcom are going to be very, very positive. I think we're going to see an upswing in Broadcom. It's going to be the bright shining star at the end of the day after market close, Thursday, September 5th, tomorrow. So I'd keep an eye out for that. And if it dips, I might look at buying some Broadcom today to make some money on the dip. We can see Meta Platforms, which is Facebook. This is a stock that was up in the 440 range. It's now dropped yesterday from 550 range, 540 range. It's now dropped $9, $10 yesterday, down to 511. Looks like it's coming down another $4 today. If this stock gets into the 490s, this is one I would definitely look at acquiring because it will be a $550 to $600 stock when it announces earnings or just after come October. So I am very bullish on Meta. If we look at NVIDIA, NVIDIA is dropping, but this presents a great buying opportunity if you bought into NVIDIA. They had good earnings. They just didn't have 400% growth that they have in, and I'm exaggerating on that number, but they haven't had three-figure growth because they've grown so much already over the past 2 years. But they're growing, they're making money, their revenue is growing, their earnings are growing, their cash flow is extremely positive. They announced a massive $50 billion stock buyback with their earnings release this quarter, in addition to the $25 billion they announced last year, which they still have $7 billion left to buy back. So they're buying back tons of stock and using the cash wisely to do that. And then we have Google. Google's below 160. This is a stock that should be $185, $190 stock. And it will be again as tech comes back into favor. The interest rate cuts aren't just going to benefit the financials. They're also going to benefit tech stocks and the ones that are strong and doing really well. So getting in at Google at this price and holding it will serve you well. Then we get down to Adobe. Adobe releases results next week. 8 days from now. We'll see those results come out a week tomorrow. And this stock has been climbing nicely, getting back towards, if we go year to date, it was up above 600 in the 634 range at the beginning of the year. And then it just fell off, had some bad earnings, recovered a bit through to in the June time period, June, July, and into August. I think what we're going to see is that this stock is going to get back up into the $650, maybe $700 level by the end of the year. And we'll have to wait and see what these earnings come out and look like. But I feel they're going to be positive based on what we've seen from others in the software as a service space. And then finally, financials. If you'd listened to my video yesterday on SoFi, I predicted that this stock was going to pull back. It was around $8 yesterday. I advocated to sell, wait to get back in when it's lower. It dropped 46 cents yesterday. That's a massive move to the downside for this stock at $7.53 now. It's looking like it's going to drop again today. This is a stock that could get down into the 710, 720 range. Buy at that level. If it drops into the sixes and you've got cash, buy more. This is an $8 stock again before the end of the year. And then we've got some of the others. JP Morgan had an off day yesterday. I still wouldn't touch it at 220 right now. M&T Bank, I'm not going to touch that in the 170s. I'm going to wait for the 160s, 150 range. Morgan Stanley dropped $4 yesterday, more than 4.5% here, down below $100. This stock looks like it's going to drop again today. Wait to see where this bottoms out. This is a great one to buy going into the mid-October earnings period for Morgan Stanley. I bought a bucket load of Goldman yesterday. I love Goldman as a company, and at a $23 price drop, I didn't get in at 23. I think I bought in at 489, but I waited for it to come down into the low 490s and then started making some purchases at 492 and as it continued to come down. I think this is a stock that by the end of this week will recover back up into the 500s, let alone in October. So I'm waiting for the ride, the cycle to shift here a little bit, the narrative to turn, and this thing to go back up. That's where we are today on September the 4th. Good luck with your trades. If you're liking these videos, please hit the subscribe button. Tell someone who might be interested in putting their money to work for them and working less for their money about the channel and the knowledge that I can help to share with them to encourage them and to support them in their journey. Good luck with your trades, and we'll